Thank you both. That was fantastic, a really interesting perspective. Glad to welcome now Alastair Graham from Golden Lane Housing, who had a very early start this morning, so thanks for joining us. Alastair, is Stuart here?
Thank you, Geeta. Yes, it's just about lunchtime now with my body clock, so I'm looking forward to that shortly. Thanks very much indeed. I'm Alastair Graham, I'm Director of Golden Lane Housing, and together with Stuart, who we'll be passing on to shortly, who's one of the GLH trustees, we're just going to say a few words about the experience of Golden Lane Housing in the kind of social investment space. And particularly talking about the role, very important role that trustees played in all of that. They move magically on, that's fantastic. So first a little bit about GLH. Who are we? We are a leading national charity now for people with a learning disability. We provide housing management, housing maintenance, tenancy support for people with a learning disability up and down the country. We were established back in 1998. We are part of the Royal Mencap Society group, and they set us up back then when we bought our very first house. And since then we've grown steadily, well in fact fairly rapidly, so that we now have 700 properties up and down the country. That's about 500 that we own, 200 that we lease, and we have over 1,500 tenants with a learning disability. And in the good old days, we were able to get grants to help us purchase properties. These are grants from PCTs, as they were then, and local authorities, and top them up with loans. But that became increasingly difficult kind of post the financial crisis of 2007, 2008, because loans from banks became increasingly difficult to get on terms that were acceptable to us. And also grants started to basically dry up. So we thought, what on earth can we do? What is the opportunity to do something a little bit different moving forward? So we thought, can we raise private finance in a different way? Is there an opportunity to get institutional and retail investment into this space? And around 2012, 2013, the macroeconomic climate was fairly favourable to that, and I think still is actually, because we got low interest rates, low inflation. So if you're an investor, you're not getting very much money in your deposit account, you're looking for maybe a more attractive home for your money, get a better return, and the return you do make is not being eroded by very high rates of inflation. So there's a real opportunity there. And from our point of view, we still have an asset base of around £83 million at historic cost value. It's over £100 million in today's money. And we had a reliable rental income stream. So the business model is fairly straightforward. We let our properties out, we charge a rent, and the rent pays for the management and maintenance of those properties, plus servicing our cost of capital. And we also have a track record, so from an investor's point of view, they can see how we've done this over the years since 1998. And we did actually dip our toe in this particular water back in 2003 when Golden Lane Housing raised a bond with the help of Triodos, and we raised 1.8 million at that time. So we started thinking in 2012, can we do something similar but on a much bigger scale now? And again, working with Triodos, we did a lot of soft market testing. We talked to charitable funds, to social investment organisations, and came up with a product that we thought would be attractive, which was a 5-year fixed term bond at a fixed rate of 4%. And much to our surprise really, we actually got a lot of retail investment, which means individual people who could invest anything from, I think £2,000 was the minimum you could invest, up to whatever you want. A lot of those people invested, as well as the charitable trust funds and so forth. And we raised a total of £10 million through that route. So there were over 600 actually individual people investing their own money in this, as well as the institutional investors. Which is good, not just because you got the money in, but also because it helped to spread the word, spread the message about disability, particularly learning disability in relation to housing. And we got a lot of good publicity, and Stuart will touch on this in a moment, from that and from the next bond we issued. So last year we thought, well, that was very good. Should we do the same again? But we couldn't really, because the social trust funds, charitable funds, etc. were saying, well, we've already invested in you last year, why are you coming back for more investment now? So what we thought is, well, can we get a fully commercial product out there that commercial, institutional, finance investment companies will want to invest in? And that's what we wanted to do. And we knew that in order to do that, we'd have to provide what's called liquidity. This world is full of lots of jargon, which I've had to learn, and basically liquidity means that if you invest your money, can you get it back? So the 2013 bond, you can't get your money back until 5 years' time. Whereas if you're an investor, and something happens in years 2 or 3, you might want your money back at that point. So can you create that kind of liquidity, which is something that we looked at. And around that time, we worked with an organisation called Canaccord and also Alastair, who were setting up the retail charity bond platform, which basically is a platform where you can raise a bond, and that bond can be listed, which means that it can be traded. So if in year 2 or 3 you want your money back, you sell your bond, much as you would selling your shares. And that kind of liquidity proved very attractive to investors. So in 2014, we worked to get something going through the retail charity bond platform, and we managed to do that very successfully. In fact, we were the first bond to be listed, first charity bond to be listed on the London Stock Exchange. And since then, 1 or 2 other organisations have followed us through that particular platform and raised money in a similar way. And we actually raised £11 million in 8 days, which was hugely successful for us. And we've invested that £11 million, as with the previous £10 million, in buying housing up and down the country for people with a learning disability. So that's 220 people now who have a really high quality home, long-term security that they didn't otherwise have. They may have previously been living in remote, large institutional settings. They're now living based in the community, often just down the road from mum and dad. And we had an impact assessment which we commissioned, which again Stuart will say a little bit more about, but that showed real improvements in quality of life, improvements in confidence, levels of independence, people learning new skills. And I personally, visited some of these properties, seen these tenants and their support workers, and it is just fantastic to see the kind of new lease of life which they've had as a result of these bond issues. We'll just move on another slide. So the bond in that case was offered a slightly more attractive rate, 4.375%. That's a very exact figure. There was a lot of negotiation around that. And I think in the end we did get it back. About right. It was a 7-year fixed, or is a 7-year fixed term bond, but we can extend that to 9 years at our discretion. And why did it work? It worked because it was a good deal. It was a good deal from the investor's point of view. That rate was quite attractive to them. We offered them what's called a net asset covenant. Basically that means that we promise that the value of our net assets will always be a certain margin above the amount of our net liabilities. So we didn't offer any actual security, unlike a mortgage or that kind of loan, which was quite attractive to us. It was listed, so investors had that liquidity. If they want their money back before the end of year 7, they can sell their shares. And last time I looked, the bond was trading at slightly above par, which means you will get back slightly more than you put in. It's a reliable income. Track record we had was impressive to them, and they could see we had an ability to refinance that bond at the end of the term. And I'm now going to hand over to Stuart, who's one of our marvellous trustees on our board, who helped us to develop this and taking it forward. We'll talk particularly about the role of the trustees and that particular viewpoint. Okay.